In this video, we're going to address the decision of whether to sell or process further when the production process produces multiple products from a single raw material. From my previous video, you already know that a sell or process further decision is generally in the food or natural resources processing. This is when raw materials such as milk or corn are either sold as is or processed further into another product, which may sell at a higher price but also have additional processing costs. What does this look like when there are multiple products? In this case, one raw material can result in several end products. For example, apples may be processed into either bags of apples, applesauce, or canned apple pie filling. These multiple end products are called joint products because they are jointly produced from one raw material. Let's look at this process so that it's really clear. We start with one raw material, such as milk. All of the raw material will go through a common process. In the case of milk, this would be pasteurization. That common process will involve costs, which are called joint costs, because the same process is used for all the products that might be produced. Note that these joint costs are common to all the end products that are produced, so they do not change between alternatives. Therefore, all joint costs are ignored for purposes of incremental analysis. Joint costs are therefore irrelevant in incremental analysis. After this joint process, say we can produce two products, A and B. These are joint products because they are both produced from the same raw material. This is called the split-off point, the point where the raw material is divided into individual but joint products. Note that we might be able to sell both product A and product B right now to earn revenue. Some products, in fact, can't be produced further and have to be sold at the split-off point. But many products can be processed further. This will result in additional costs, but may also result in additional revenues that will offset these additional processing costs. At the end of the additional processing, we end up with different products. In this case, product AA and product BB. We can then sell these additionally processed products, hopefully at a higher price to earn more operating income. So the question becomes, should we sell product A at the split-off point, or should we process further into product AA and then sell? Similarly, should we sell product B at the split-off point, or should we process product B into product BB and then sell? That will depend if the additional revenue earned by selling the product which is processed further is greater than the additional costs of processing further. To determine that, we have to go through the incremental analysis process, following all 5 steps, which we will apply to a multi-product example. Alcan Inc. is a chemical manufacturer. The company's main raw material produces 2 products, product DL and product PT. Each month, the company processes 32,000 kilograms of their raw material with a cost of $280,000 into 20,000 kilograms of DL and 12,000 kilograms of PT. DL can be sold at $5.50 per kilogram and PT at $9.40 per kilogram. DL can be processed further into 20,000 kilograms product DLB at an additional cost of $160,000 and can be sold for $12.80 per kilogram. PT can be processed further into 10,500 kilograms of product PTE at an additional cost of $63,000 and can be sold for $17.20 per kilogram. Should Alcan Inc. sell product DL and PT at the split-off point or process further? Step 1 is to explicitly state the alternatives. In this case, the alternatives are to either sell products DL and PT at the split-off point or process further. Step 2 is to determine which costs are relevant. Remember that relevant costs are ones which change between alternatives and they happen in the future. Let's analyze each product individually, starting with product DL. We want to indicate if the information applies to the sell at the split-off, product DL, or process further, product DLB. We'll highlight revenue and costs which are incurred to sell DL in yellow and revenue and costs to process further into DLB in green. DL can be sold for $5.50 per kilogram if it's sold at the split-off point. If it's processed into DLB, it will require additional processing costs of $160,000 and can be sold for $12.80 per kilogram. What about the 32,000 kilograms of raw material at a cost of $280,000? Is this relevant information for our analysis? Remember that the processing of raw materials is common to all of the joint products. Therefore, these costs don't change between alternatives and are irrelevant for our analysis. The information about the raw materials and the common costs of processing the raw materials are irrelevant and must be ignored. What about the 20,000 kilograms of DL? Is that relevant? 20,000 kilograms of DL can be processed into 20,000 kilograms of DLB. Since there is no change in the amount of the product under both alternatives, it means that we can perform incremental analysis on a per kilogram basis or on a total revenue and total cost basis. If we choose to perform the incremental analysis on a total revenue and total cost basis, then yes, this is relevant, even though it does not change between alternatives. We will be doing both per kilogram and total analysis, so the amount of each product that can be produced is relevant. To summarize, there are 20,000 kilograms of DL. DL can be sold for $5.50 per kilogram, or it can be processed further into 20,000 kilograms of product DLB at an additional cost of $160,000. DLB can be sold for $12.80 per kilogram. Should Alcan Inc. sell product DL at the split-off point or process further into product DLB? We will first do the analysis on a per kilogram basis using a chart, with column 1 as the description, column 2 as the sell, column 3 as the process further, and column 4 as the difference between the two alternatives. We start with the sale per kilogram, $5.50 to sell, $12.80 for process further. $5.50 minus $12.80 is equal to negative $7.30 in the difference column. We are then going to determine all of the costs per kilogram, so I put a subtitle in column 1, cost per kilogram. We know that there are additional processing costs of $160,000 in total, but since there is no change to the number of kilograms between DL and DLB, we know we can use the per kilogram information to analyze the alternatives. There are no additional processing costs if we sell product DL, so we place a 0 under the second column, sell. For process further, $160,000 divided by 20,000 kilograms equals $8 per kilogram of additional processing costs. Therefore, we place negative $8 under process further, DLB. The difference in column 4 is 0 minus negative 8, which is equal to positive 8. We can now add each of the columns. For column 2, sell DL, $5.50 plus 0 is equal to $5.50. That is the amount of operating income we will earn by selling DL per kilogram. For column 3, process further, DLB, $12.80 plus negative 8 is equal to $4.80. We will earn $4.80 for every kilogram of DLB that's sold. For column 4, difference, negative $7.30 plus $8 is equal to 70 cents. What does this mean? It means that we should sell DL at the split-off point because we make 70 cents more per kilogram if we do that. Management would now have to consider qualitative factors, step 4 in our incremental analysis steps, but since no additional information is provided in the question, that's difficult to do. I personally can't think of any qualitative factors that would support the decision to process further, but remember to always read the question to ensure you understand any factors presented. Note that this analysis can also be done on a total revenue and total cost basis. We just have to calculate some numbers. For DL, $5.50 per kilogram multiplied by 20,000 kilograms is equal to revenue of $110,000. For product DLB, additional processing costs in total are $160,000. And for DLB, $12.80 per kilogram multiplied by 20,000 kilograms is equal to $256,000 of revenue. Inputting all the information into the chart, we see that the difference in operating income is a $14,000 increase if the company decides to sell DL at the split-off point. This is exactly the same outcome, only we understand better the magnitude. If the company does process further, they will lose $14,000 and reduce their operating income. The outcome, our decision, does not change. But by using total revenues and costs, we really do have a better idea of the magnitude of the loss if the company decided they wanted to process further. We can now go back to the question and do the same analysis for product PT. Should the company sell at the split-off point or process further into product PTE? We'll fast-track this analysis since we already know how to do that. Again, the 30,000 kilograms and the $280,000 in joint costs are irrelevant. Product PT can be sold for $9.40 per kilogram at the split-off point, or it can be processed further into product PTE at an additional cost of $63,000 and sold for $17.20 per kilogram. What about the information that 12,000 kilograms of PT can be further processed into only 10,500 kilograms of product PTE? Is this relevant information? And the answer is absolutely it is. The amount that can be processed changes between alternatives, so it's relevant and we must perform the analysis on the basis of total revenues and total costs. We cannot do it on a per kilogram basis because the amounts change. Here is the summarized information, which we can then use to analyze whether to sell at the split-off point or process further on a total revenue and total cost basis. Remember, we have to do a few calculations. Product PT sold for $9.40 per kilogram multiplied by 12,000 kilograms is equal to $112,800 of revenue if PT is sold at the split-off point. Product PTE has total additional costs of $63,000 to produce. Product PTE can be sold for $17.20 per kilogram, so total revenue is equal to $17.20 multiplied by 10,500 kilograms, which is equal to total revenue of $180,600. We now have all the amount, so let's add it into our chart. If we sell PT, it has a sales revenue of $112,800, no additional processing costs, so total operating income is $112,800. If we sell product PTE, it has sales revenue of $180,600, additional processing costs of $63,000, so total operating income is $180,600 plus negative $63,000, which is equal to $117,600. For column 3, the difference in sales revenue is $112,800 less $180,600, which is equal to negative $67,800. The difference in process further cost is 0 less negative $63,000, which is equal to positive $63,000. Negative $67,800 plus $63,000 is equal to negative $4,800. What does this mean? If the company sells product PT at the split-off point, they will lose $4,800. Based on the qualitative analysis, the company should process further into product PTE as they will gain an additional $4,800 in operating income. Management would now have to consider qualitative factors, step 4 in our incremental analysis. But again, since there's no additional information, that's difficult to do. But be sure you check out the problems you're given in tests and exams to see if any qualitative factors are provided which you need to analyze before determining if the product should be processed further. Note that we have just applied the steps in incremental analysis to a sell or process further in a multi-product environment. You can see we simply did the single product analysis twice, analyzing each product individually. Key here is whether you can perform the analysis on a per unit basis if product amounts don't change, or on a total revenue and cost basis when product amounts do differ between the split-off point and the process further. In addition, we recognize that common costs from raw materials are irrelevant in the incremental analysis in a multi-product environment. As always, Thanks so much for watching.